Hi, my name is Sam Price, the Crypto Lifer, and I decided to make a video talking about the ETF launch, specifically some common misconceptions about how these ETFs function regarding the capitalization or the decapitalization of their shares. Let's start with a bit of background. Exchange-traded funds, or ETFs, have been a much anticipated addition to the Bitcoin and the crypto world. Their introduction was anticipated by many to bring a surge in Bitcoin prices. However, the market witnessed a surprising twist. Instead of the expected pump, there was a substantial sell-off. Why did this happen? We are here to dissect the reasons and the mechanisms behind the selling pressure. One key player in the scenario is the Grayscale Bitcoin Fund, also known as GBTC. GBTC's conversion into an ETF was a major event given its substantial holdings in Bitcoin. Interestingly enough, the fund was trading at a discount prior to the conversion. This scenario led to a wave of arbitrage trading, contributing significantly to the market sell-off. How can you arbitrage trade an ETF? In simple terms, if the fund is trading at a discount, that means the value of the shares are less than the value of the Bitcoin they represent. So if those shares are converted into Bitcoin, the value of the discount is gained as profit. But this was not all. Grayscale's decision to maintain relatively high fees for his ETF compared to its competitors also played a crucial role. This decision prompted many investors to sell their GBTC shares and switch to other providers offering more competitive fees, like BlackRock's iShares Bitcoin ETF. Such shifts in investor preferences have a profound effect on market dynamics. Another twist in the tale involves the bankrupt exchange FTX. FTX had significant exposure to GBTC, and in an attempt to generate capital, sold about $1 billion worth of GBTC shares. This massive sell-off further impacted the market, contributing to sell pressure on Bitcoin. In contrast to Grayscale, the other ETF providers like BlackRock quickly gained traction due to their lower fees and strong brand recognition. BlackRock's Spot ETF, for instance, reached an impressive $1 billion in assets within just 4 days of its launch. And even though all the GBTC outflows, the ETF as a whole remained positive on its net inflows. Now let's dive into the technicalities of the ETFs and how they interact with the market. All current Bitcoin ETFs are cash creates. What this means is an investor can only invest dollars into the fund that converts that into Bitcoin after trading hours close. This purchasing of Bitcoin happens using OTC, or over-the-counter services, and not directly from the market, so there's no immediate buy volume. So, what the markets felt was a full force of GBTC sell pressure, but not the opposite of the buy pressure, which happened OTC. So where does this OTC Bitcoin come from? Coinbase. Coinbase is the custody and capitalization provider for many of the Bitcoin ETFs. Their OTC desk is gradually fueled with Bitcoin using their institutional buy bots. These bots buy over time using limit orders, mostly on support levels, so as not to directly pump the price. During the first week of trading, the Coinbase ETF desk also reached out privately to many known Bitcoin OGs, offering to buy their Bitcoin at specific prices and offering a sizable but publicly undisclosed premium, which means Coinbase was prepared to offer above market price to refill their OTC desk. In conclusion, understanding the intricacies of how large funds and ETFs operate in the Bitcoin market is crucial now that traditional finance has arrived. It's not just about direct buying and selling on the market. The strategies employed by these large players, including their fee structure and the timing of their trades, play a significant role in shaping market dynamics. Just wait until options are granted on the Bitcoin ETFs. Understanding how financial institutions use option trading to generate passive income will be a topic for another video. Thank you for joining me in this deep dive into the Bitcoin ETFs and their market mechanics. Remember, staying informed and understanding the underlying mechanisms of these financial instruments is the key to navigating the crypto trading world successfully and staying immune to the FUD. Thank you so much for watching. Please comment, like, and subscribe. Hit the bell for notifications so you can find out when I post my next video. And remember, if you came to the channel, then you're already doing the right thing. Crypto is life.